All right. I am here live and I have Jim Riley, right? Riley?
That's correct, man.
Jim is the director of What Needs to Be Done Today with Roberts Accounting.
That's a
Um,
new title based on the current situation, yes.
yeah, exactly. So I asked him to get on our lunch break with Nate here today and go over just some items that are listed in the new 2-point Trudell. What is that called? The CARES, the acronym for it. CARES.
CARES.
Yeah, CARES. And
Don't ask me. I don't remember what the entire. We're just going with the CARES Act. It's far
CARES Act.
simpler on all of us.
Yep. And there's a lot of stuff in there. I think it's 800, 900 pages long, just in general. But I asked Jim to get on the call today and just kind of go over specifics about mortgages. We also have a little bit of information about small business loans. I kind of alluded to this yesterday in my call. And the last item I think would just be just some general. It's still kind of up in the air as far as tax implications are concerned for previous years. Is that correct?
On the personal side, that's correct. On the
Yep.
business side, there are some things that they're rolling back that were available to business owners and organizations prior to the tax law change. But
Right.
at the moment, those are mostly on the back burner from an accounting standpoint because we're in the middle of tax season. Even though we have an extension through July, our ability to really dive into those and go back and advise our professional clients on what those are, we're just deferring having those conversations for probably a month or 6 weeks.
Gotcha. Okay. So yeah, so I'll kind of tee you up. You can go with some stuff real quick. I'll just go over kind of what we usually do. New listings on the market within the last 24 hours. We got 30 new listings on the market currently, all from commercial to residential to rentals. Looks like there's a few multifamily properties as well, but you got about 2 new ones in Brighton, a couple in Greece, a couple in Henrietta, 4 new ones in plus a lot for sale in the Mendon area. And then I think that these Rochester City ones are kind of part of that big $1.7 million 31 properties. Yeah, they are 31 properties that are out there for investors out there that want to jump into the investment in multifamily properties in New York, in Rochester area. So also real quick, thank you so much for those who donated for the acute elderly care at Highland Hospital. Justine put that order in today for DeBella's, so they're going to be getting lunch provided by everybody's donation. So great job on that. And then we'll tee it up here for Jim. So Jim, real quick, and we won't go too long on this stuff, but if you could just give us some general information about what do you see with mortgages specifically in the new CARES Act?
Sure. So mortgages in specific, and obviously New York State was a little bit ahead of this curve from Governor Cuomo. But if you have a non-federally backed mortgage and you are in some financial stressors at the moment, reach out to your organization, as each organization is handling them differently. For example, my provider, when I talked to them, said, you provide us the documentation that you're in financial stress and we are going to defer payments for 90 days. And the way they're handling getting their money is they're taking those 90 days worth of payments, they're dividing them by 6, so that if you say you didn't pay April, May, and June, starting in July, you're going to owe that particular institution your normal payment plus 1/6 of the payment you did not pay. I do know other organizations are taking the 3 months of payments and they're tacking them on at the end of the loan so that your monthly payment will stay consistent, except it's extended now for the additional payments at the end of your loan. Really, for non-federally backed residential mortgages, that is the only relief that I'm aware of at the moment. And my understanding is that is up to units of 4. So if you do have a small rental property that has up to 4 units in it, that applies as a residential mortgage. When you go over the 4-unit number, then you get into commercial mortgages, and there are different rules and regulations for that. I'm not as familiar, but I believe you can get a 30-day deferment, And then within a period of the first 30 days, I think it's 15 days, you could get a second deferment. And then again, another deferment after that with a total of maybe 90 days. Now, I believe there are caveats on that I'm not 100% sure of, but I do not believe that if you take the deferment on a greater than 5-unit building, you're allowed to collect rent because you've taken the deferment. I don't want to be held to that because I only surfaced that information very, very briefly.
And that's coming from the report, the CARES Act. Okay, so that's something that's federal, and this is all federally backed loans, right?
This is a 90-day deferment while it's in the CARES Act is for non-federally backed mortgages.
Non-federally backed mortgages, okay.
If you have a federally backed mortgage, there's, I believe, 5 different types of federally backed mortgages that are in the CARES Act. For a federally backed mortgage, if you have one, you can get a 180-day deferment with no penalties or fees associated to that mortgage. So essentially, if you have a federally backed mortgage and it's covered within the CARES Act, you could call that lender and say, I'm in financial hardship. You stop paying, let's say today, 6 months later, it's now October, and then you would begin to potentially pay that mortgage at that time. However, at any point during that 6-month window, you can say, I'm back on my feet, I'm ready to start paying again. Or you can say, getting near the end of that 6 months, I'm not back on my feet, and potentially get a second 180-day deferment. So on certain federal backed mortgages, some folks may be able to defer their mortgages for up to a year with no additional fees or penalties.
Okay, wow. That's down the federally backed side of things. So you also mentioned 2 to 4 family properties would be eligible for the 90-day deferment as well. Okay.
They're treating, in the CARES Act, they're treating those as a traditional mortgage.
And does it have to be owner occupied at that point, or no?
I did not see any language relative to owner occupied in the CARES Act.
Mm-hmm.
I would have to go back and look at it in more detail. I'm hopeful that would be something that would have stood out to me.
Mm-hmm.
But I can't say with 100% certainty that is not in there, but I did not see it in my review yesterday.
Okay. So anybody that has any questions about this stuff, certainly let me know. Yes, we can reach out to Jim directly over at Roberts Accounting too. And maybe I can, if you're comfortable with me giving your information out to people on this as well, to reach out, or?
Oh, of course. Yeah, absolutely.
Okay.
Just a warning to everyone.
Mm-hmm.
It's been a little busy. So if you're not a client today, I will do everything in my power to get back to you as quickly as possible.
Mm-hmm.
Although it may take a day or two at this current juncture.
And that's obviously, a kind of a selling point too for the firm in general. They do a great job. Especially during tax time, but also have been they've been as responsive as they can be with everything going on right now. So that's an advertisement for Roberts Accounting too. So
well, thank you. I do appreciate that. The delay we have at the moment is within the CARES Act for small businesses. They've launched the Payroll Protection Program, which essentially allows organizations to keep employees on or bring employees back that have been laid off.
Can you elaborate more on that program as well? Because that was the next thing I wanted to go into was kind of how that all works. And a lot of people that I work with that are clients of mine and that are connected with are small business owners. So I'm sure they have a lot of questions too on how all that works. So if you could elaborate a little bit more on that too, that'd be great.
Sure. So let me see if I can summarize at the 20,000 foot level. The way the program works is this. You find your W-3 from your payroll provider last year. You divide that by 12, multiply it by 2.5 is essentially the amount of loan that you can go to the SBA asking for cash now to cover payroll expenses. They will also allow you to use some of this loan to pay mortgage interest, rent, and utilities. So what they've done is they've streamlined the application process. They're not requiring collateral or personal guarantees on this loan, which is unheard of with the SBA, but they're attempting to get money into small business pockets as quickly as possible. Now, what the real benefit to a lot of folks who are looking at this is from the day you get your disbursement, and let's say you got the disbursement today, in 8 weeks on June 1st, you can go back to your lender with your payroll and show that essentially your payroll remained the same. And at that time, less portions of rent and utilities and interest, they will forgive up to 100% of that loan that you used for payroll and percentages of those other three items. So it's a way for organizations to keep their folks on board and still have more of a grant than a loan, because the other programs coming out of the Family First were true loans, and there's no way to get forgiveness on those. But there's a few other details in what we're calling the PPP that if folks do want to have a conversation with, I'm happy to get more details on sort of more of the details they need to be aware of on some of the things that they're not going to get forgiven if they spend money on things of that nature, how long the payback period is, because it's much shorter than most folks think it is. And they really need to make some plans and budgetary decisions relative if they don't get 100% of this loan forgiven.
Okay. And that is, what about anybody that was put on furlough or anything like that? Is there anything type of, let's say they had to put their employee on furlough and their intention is to bring them back. Is there anything that is stipulated about that at all?
Okay. I'm going to give you some speculatory and some personal opinions here.
Mm-hmm.
I think that's the intent of the payroll protection program, is to actually, if people have been furloughed, to bring them back because you can get forgiveness. But with the current unemployment available through New York State, then the supplemental unemployment that the federal government is offering at this time, I have been told specifically by a couple of clients, some of their employees are making more sitting home than they would be making working. Is that an unintended consequence of being in New York State, the way New York State's unemployment is structured? Probably. Is there going to be any thought by the feds to fix that? No clue. So there's this interesting thing going on that some business owners are like, my guys and gals are happier at the moment because they are home unemployment because they're getting both sides of it. So I don't know that some of the thoughts on the PPP are necessarily going to come to fruition, particularly with us still being on pause in New York State, and certain organizations can't go out and work anyway.
But what about if you have, obviously, if you're employed and you can't be on, if you're technically employed, you can't be on unemployment, right?
Correct.
So that would be a good question for these. What's that? That would be bad.
That would be bad. That would be bad to be on payroll and taking unemployment. I'm sure somebody would frown upon that.
Yes. Yeah. So definitely conversations for employers to have with their employees, but also to have kind of a game plan as you're going through all these loan products. So is that up and running yet? The site is supposed to be done this week. Is that what I understand?
The payroll protection program loan application is available. Some banks are allowing you to submit them today, and they're going to basically take them in rank order, and then they will submit them on Friday.
And that's coming from banks at the branch level or online, or okay.
At the branch level, and you have to check with your individual bank to see if they are participating.
Okay.
Not all banks are going to participate. Independent contractors and sole proprietors, I believe, are the two categories that actually cannot submit until the 10th. So the 1 week lag between that category of employment and everybody else. But it opens on Friday. Again, certain organizations allow you to submit your application today. Others are not allowing you to submit it Friday. It's a very streamlined application that the SBA has come out with.
Okay.
And you basically submit it with some very limited documentation, and then wait to hear if you've been approved for the loan.
Interesting. Okay, but you'd have to have some type of information about the payroll. You'd want to have your payroll documents ready to go when you have that submit that application?
The simplest way that we're telling folks to do is to find your year-end statement from your payroll company, the W-3, because that's going to have your total payroll as well as the employees that you had on that for the year.
And this is from last year, or since if let's say you haven't filed yet. Okay, so
just because you already have to have that documentation.
Yeah, got it. Okay.
For the 119.
Okay, got it.
And the way the form is literally set up, it's 3 boxes. Average monthly payroll. There's another box that says multiply that by times 2.5. It'll give you a number, and then the third box is number of employees. And at that point, in terms of documentation, they want to know how you did your math. So if you put the W-3 with that documentation, that's how you did your math. It's very straightforward. Some clients do want to put some of their other figures into that. That's up to them. We're advising maybe not, because all it does is make the loan larger, and it also makes more of the money in there potentially not forgivable, which ultimately then you're on the hook for to pay back over a fairly short period of time, which is 2 years at the moment.
Right.
So depending on how future cash flow might look, some folks may not want that additional overhead coming out of a trying time as it is.
Gotcha. Okay, and then one last question for you. So anything new that we need to learn about that we need to utilize with our filing of taxes this year? I know it's been extended to July 15th. Anything else we need to know there? Or?
Not particularly. The recommendation, and this isn't just from me, this is from the IRS, is like, if you think you're due a refund, sooner is better than later. But you do have until July 15th. And bluntly, if folks think they're going to owe money, those are the folks that are more likely to sit on it till June or July.
Right. Okay.
But the official word out of the IRS is, if you think you owe a refund, file now. Okay.
Awesome. Well, thank you so much for taking some time out and going through and explaining a couple of those points. Anybody that has any other questions for Jim, just shoot them over to me, and I can kind of connect people that way. And again, Jim works with Roberts Accounting, so anybody wants to set up a consultation with them, that's their information. I'll put that in the show notes too. One last thing from our end is we're still doing our contest to support local businesses. This week we're doing Silver Iguana, who is in the North Winton Village area. Great Mexican food. They do margaritas to go, so that's a big plus there as well. And I'm doing a $25 gift card for anybody that can answer the question that we've been posting, which is, can you name the first film that was shown at the Dryden Theater? So anybody that can answer that question, Facebook message me. I'll collect everything. We'll look at everything on Friday. And Jim, you can always submit that as well if you'd like.
Thank you. Just a quick thing. If you get the margarita to go, please do not drink it till you get home.
Exactly. Good point. Thank you so much, Jim. Everybody else, have a great day. Thanks for tuning in. And thank you so much for the opportunity. And we'll talk to you guys tomorrow. Appreciate it, Jim.
Thank you for having me.
All right. Yep. See ya.
Take care.